Hello, Tim Tucker here from United Way Central Ohio Tax Time Training. In this video, we're going to be discussing information to help you feel comfortable discussing Ohio municipal tax issues with VITA clients. And the whimsical subtitle for this video is Who the heck is Rita and why does she want my money? This video will provide a high-level tutorial on how municipal tax works in Ohio. Having this knowledge will enable us to discuss municipal tax issues and obligations with our clients if needed. Please note, though, that we, VITA, do not prepare local tax returns for clients. Here are the topics we'll cover in this video. We'll provide general information on local tax. We will then discuss RITA, local tax rules. As an example of a non-RITA district, we will talk about Columbus local tax rules. We will then present some scenarios, which will give a demonstration of how some of this actually works in practice. We'll talk about whether we need to file or not, and then how to file. Throughout this video, I'm going to be using the term local interchangeably with municipal and city. Let's start by discussing some general information on local or municipal tax. First of all, I want to make it clear there is no relationship between local tax and Ohio school district tax. They are two totally independent entities, so please don't confuse the two. Ohio residents have a local income tax obligation to where you live and to where you work. But most where you live localities offer credit for tax already paid to where you work, up to a certain credit limit. And we'll give some examples later on to make this clear. Employers in Ohio are required to withhold the proper amount of local tax for your where you work municipality. In other words, where you earn the income. And you'll see this on the W-2 in the local boxes 18 through 20. And employers are usually pretty good about withholding the proper amount of tax for your where you work locality. Sometimes an employee works in multiple cities throughout the year, and you'll see that on W-2s where there'll be multiple copies of the W-2 and with different localities and different taxes withheld for those localities. That shows up in W-2 in local boxes 18 through 20. Some cities in Ohio have their own local income tax division to do the tax collecting, for example, Columbus. Others use a third party known as RITA, Regional Income Tax Agency, to do the administration of the local income tax collection. Something new for tax year 2024, the income of all individuals under 18 years of age will be exempt from municipal income tax in all municipalities in Ohio. And I won't sugarcoat it. Local taxes can be quite complicated. Let's go over some rules and then we'll look at a few scenarios. Let's discuss a bit about RITA. If you go to the RITA website and click on RITA municipalities, you can see if RITA administers taxes for a specific municipality. And that's actually the quickest way to see whether a municipality is a RITA or non-RITA. And the site will show the tax rate for that municipality, the tax credit and the credit limit, and other information for that municipality. In general, RITA taxes earned income and benefits. RITA does not tax most unearned income, but there are some exceptions. Let's go ahead and take a quick look at the what is taxable section on the RITA site. I'm at the RITA website now, and the RITA municipalities are shown here if I click on the RITA municipalities. But we'll circle back to that when we go through some of our scenarios. What I wanted to look at now is the FAQs section. And if I look at individual FAQ and taxable, non-taxable income, I can see what is taxable and what is not taxable. So let's look at what is taxable. And there's quite a long list, but most of it relates to your wages and your benefits, such as contributions to retirement plans, things like that. There are a few things that are unearned income that show up here, such as cancellation of debt. There's some fellowship grants that show up, strike pay, I think jury duties on here as well. For non-taxable income, things like interest, dividends, capital gains, Social Security, pensions, those are non-taxable. For RITA, let's discuss the issue of whether I need to file. So what RITA says is that if you're a resident of a RITA municipality and you're 18 years of age or older, they want you to file an annual return, even if no taxes due. If you're a non-resident of a RITA municipality, if you have earned income that's not subject to employer withholding, you need to file. Now, in most cases, when you're a non-resident working in a RITA municipality, your employer will be withholding the proper amount. So usually this doesn't apply. Now, for the residents, there are exceptions to the rule that I just mentioned. And one of the exceptions is if you've got no taxable income, they want you to file an exemption form the first year that this applies. And then you won't have to file after that unless you start to get some taxable income. Yeah, it's kind of complicated. Let's go ahead and take a look at the actual wording on the RITA site. Once again, I'm on the RITA site, and this time the information that I want to look at is buried under this individuals link. So if I click there and then click on the link, do I need to file? It talks about the information that I just had in the slide. Then it also talks about some exemptions down here. For example, if you're retired, they want you to file an exemption form the first year if you have no taxable income. Similar here, no taxable income. What about non-RITA municipalities? Well, every non-RITA municipality has their own set of rules. We'll go ahead and take a look at Columbus as an example. Here are the somewhat confusing rules for Columbus on whether you need to file or not. You can go ahead and read through this, but I think what it boils down to for most of our clients are if you've had the proper amount of withholding for Columbus, i.e. 2.5% of your earnings, then you're not going to need to file. Now, remember that if you've got self-employment income, then there's no withholdings there, so you will need to file. What income is taxable for Columbus? Well, Columbus taxes primarily earned income and benefits. The list of taxable and non-taxable income looks quite a bit like the corresponding list from RITA. We'll go ahead and take a look at the Columbus Income Tax Division website to take a glance. One note is I did look at a few other municipalities, non-RITA municipalities. They seem to be similar in terms of what is taxable and what is non-taxable, but you'll need to visit the website for each of these non-RITA municipalities to be sure. Shown here is the website for the Columbus Income Tax Division. And if I drill down to the appropriate place, because I've done this before, so I know where to go. If I click on this link for tax facts under income tax home, and then if I click on general income tax FAQs, and then if I click here to access additional FAQs, I'll finally get to what I want to see, which is what is taxable. And they've got a what is taxable and what is not taxable. So if I look at what is taxable, we'll see a long list of things that you can do a stare compare between this and RITA, but they're very similar. It's the wages and benefits and a few other things that are non-earned income. There's prizes, strike benefits, there's gambling winnings. There's probably cancellation of debt in here, things like that. And if I look at income not taxable, it's again capital gain, dividends, interest, things like that, pensions, Social Security. Well, we've thrown a lot of RITA and non-RITA data at you. Let's go ahead and look at some scenarios to see how this actually works in practice. In scenario one, we have a taxpayer that lives in Canal Winchester. Canal Winchester has a 2% tax, and they give 100% credit for up to 2% paid to the where you work municipality. And for Canal Winchester, we determined that they were a RITA site by going to RITA and clicking on RITA municipalities, and then on this page searching for Canal Winchester. And since they're there, that means they're a RITA municipality. And if we click on them, then we can see that their tax rate is 2%. And they give 100% credit for up to 2% paid to your municipality where you work. Continuing on with our scenario, this taxpayer works in Columbus, which, as we know, has a 2.5% local tax rate. The employer properly withholds the 2.5% for Columbus from their W-2 wages and benefits. So the questions are, does this taxpayer owe anything, and do they need to file? So do they owe anything to Columbus? Well, the answer is no, because the employer already withheld the proper 2.5% for Columbus. Did they owe anything in Canal Winchester? No, because Canal Winchester gives credit for 2% already paid to where you work, which in this case is Columbus. That covers their 2% tax. Do I need to file? In Columbus, the answer is probably not, because everything was properly withheld. As you know, there were a few caveats in that do I need to file slide I showed earlier, but in general, the answer is probably no. In Canal Winchester, the answer is yes, because they want everybody who's 18 years old to file if they've got taxable income. Let's look at another scenario, scenario 2. In this case, our taxpayer lives in Columbus, where there's, as we know, a 2.5% tax rate, and Columbus gives 100% credit for up to 2.5% paid to where you work. In this case, the taxpayer works in Grove City, where there is a 2% tax, and we could look that up on RITA as well. We're back at our RITA municipalities page, and if we search for Grove City, we will see Grove City. So Grove City indeed is RITA. And if we click on Grove City, we can see that they have a 2% tax rate. The employer withholds the proper amount of tax for Grove City, which is 2% from the W-2 wages and benefits. So do I owe, and do I need to file? Do I owe Grove City? No, because the employer withheld that proper amount and paid that to Grove City. Do I owe Columbus? Yes. Columbus will give you credit for the 2% that was already paid to Grove City, but you still owe Columbus another 0.5%. So do I need to file? In Columbus, yes, because you owe that other 0.5%. In Grove City, no, because as a non-resident, if the proper amount of withholding was taken, then you will not need to file. Let's look at a slightly more complicated scenario in scenario 3. In this case, we have a W-2 wage income of $50,000, and the taxpayer lives in Columbus, where there's a 2.5% tax. So a total of $1,250 should be owed to Columbus. Now, this employee worked in multiple cities. This might be somebody who works for a department store and they have locations in multiple cities, and this employee divided their time between these cities. And the employer does the proper withholding from the W-2 for each of these municipalities. So he worked in Grove City and earned $10,000 in Grove City, and they withheld 2% tax for Grove City, for a total of $200. He worked in Columbus, and the local wages there were $10,000. I made the local wages the same for each of these sites to make the math easy. And the employer withheld the proper 2.5%, so they withheld $250. He worked in Canal Winchester with $10,000 local wages, and they withheld 2%. Worked in Sunbury, where there's a 1% tax, so it was only $100 withholding. And Dublin, again, it was 2% tax, so the withholding was $200. So if you add up all the total local withholdings from this person's salary, it adds up to $950. So do I owe to Columbus? Yes, because Columbus will give you a credit for the $950 already paid to the where you work municipalities, but you owe the difference, $300 difference between 1250 and 950. Do we owe to the where you work cities, Grove City, Canal Winchester, Sunbury, and Dublin? No, because the proper amount was withheld and given to these cities. Do I need to file for Columbus? Yes, because you owe them money. In the other cities, no for the RITAs, which is Grove City, Canal Winchester, and Sunbury. And Dublin is not a RITA site, but I looked on their site and it looks like they have similar rules, so you would not need to file for Dublin as well. So in scenario 4, we introduce some income aside from wages. So in this case, the income includes $30,000 in W-2 wages. There's $5,000 of self-employment income. There is $1,000 of debt cancellation on a 1099-C. There's $1,600 for some gambling winnings. There is $10,000 of state unemployment benefits. Now, this taxpayer lives in Columbus, again, the 2.5% tax rate. He works in Columbus as well, and the employer properly withholds the 2.5% from his W-2 wages from that $30,000. So that's $750. Now the question is, do we owe Columbus? Yes, we do, because there's another $190 tax owed on the self-employment income, the cancellation of debt, and the gambling income. That comes out to the $190. Columbus does not tax state unemployment payments, so that $10,000 from state unemployment is not taxed. Do I need to file in Columbus? Yes, because we owe this additional money. In one last scenario, scenario 5. In this case, the taxpayer lives in Sunbury, and I won't bore you with the RITA website, but this is RITA. I looked them up, and Sunbury has a 1% tax. Yay, low tax, but no credit for taxes paid to where you work. The Sunbury resident works in Columbus. The employer withholds the proper 2.5% for Columbus. So do I owe for Columbus? No, because that was already withheld properly. Do I owe for Sunbury? Yes, because even though you paid that 2.5% to Columbus, Sunbury doesn't give you any credit for that. Do I need to file for Columbus? As we discussed earlier, it's probably not. Again, there's some caveats for Columbus, but in general, since all the withholding was there, you don't need to file. Do I need to file for Sunbury? Yes, because you still need to pay them their 1%. As I was going through these scenarios, a question came to mind, which I don't have the answer for, but I thought it would be useful to pose it here. So let's say I'm an Uber driver. I live in Columbus, and I earn income from the following transactions. I pick up a client in Columbus and drop them off in Dublin. Or I pick up a client in Dublin and drop them off in Dublin, or I pick up a client in Dublin and drop them off in Columbus. So where is the income earned in each case? Is it in Columbus, where I live, or is it in Dublin? And you could argue that the income's earned, say, wherever you drop the client off. I haven't found a definitive documented answer for this in any of the sites that I've researched. My opinion is that you really need to treat this all as income classified as being earned in where you live. If you were to try to classify this as income earned in all these different cities, it would get to be a nightmare, and really nobody would be able to keep track of that. So for now, that's the way I'm going to be assuming that self-employment income is treated as income earned in where you live. The reason I think that's significant is if we consider the income as being earned in where you worked, then this is income in a municipality that you're not a resident of that you didn't have the proper withholding for. So you need to file, in addition to filing taxes to where you live, which most people are going to have to do, you now need to file a return to all these other places where you work. And again, it's just very onerous to think about having to actually keep track of that and do that. So how do I actually go about filing for RITA and non-RITA? Well, for RITA, if you go to their website, there's a link you can click on to actually file through the web. You can also file through paper, through snail mail, or you can actually physically drop off your return to a RITA office. For non-RITA, all these municipalities have an online presence for filing, and they all want you to file online. Some do offer drop-off service. I know that Columbus strongly encourages everything to be online. It looks like you can set up a phone appointment for some personal help. I haven't actually had any experience with that. You can file by snail mail by printing out the Columbus income tax return and then mailing it in, but this is discouraged. Some final parting thoughts as we wrap up. We, that is VITA, do not prepare local income tax returns for clients. But armed with knowledge of how this whole wacky system works, we might be able to provide guidance and answer questions for our clients and point them in the right direction. Taxpayers who have just W-2 jobs that have the proper amount of where you work withholding usually don't owe to the where you work municipality. Of course, you wouldn't necessarily know that unless you looked at their W-2 and knew the proper rate for that municipality and actually did the math to calculate to see whether the proper amount was withheld or not. Moving on, self-employed individuals do not withhold, so they typically owe and must file in their where you live municipality. And I think everyone will agree with me that local tax can be complicated and confusing. Now, if you want to play around with this a little bit more yourself, the tax layer does have options under the locality selection in the state section to do RITA and Columbus and other municipalities' local taxes. So you can get a better idea of how things work. But just to keep in mind that we don't prepare these local returns, and even if they were prepared, they're not e-fileable. They would have to be mailed in. Thanks for watching and sticking through this to the end. Links to our FAQs and useful websites are posted in the description below the video. If you have questions or comments, leave me a comment on my YouTube channel or ping me on Slack or send email to timmythetaxman@gmail.com.